Welcome to Factful Finance. Have you ever wondered why financial markets seem so unpredictable, despite all the expertise and technology we have today? The truth is, financial institutions and markets face challenges that affect us all, whether you're investing, saving, or planning for the future. In today's video, we're diving into the key challenges facing financial markets and institutions and how they're shaping the economic landscape. From global economic instability to regulatory shifts, we'll explore the issues that matter most. But first, a quick disclaimer. This video is for educational purposes only. For personalized advice, be sure to consult with a financial professional. Now, let's get into it. One of the biggest challenges facing financial markets today is global economic instability. Over the past few years, we've seen a rise in geopolitical tensions, trade disruptions, and economic uncertainty. For instance, the ongoing conflict in Eastern Europe has had ripple effects across global markets, from inflation spikes to supply chain disruptions. In fact, the International Monetary Fund, IMF, recently forecasted global growth at just 2.9% for 2023, down from 3.4% in 2022. This stagnation is a direct result of these unpredictable factors, making it harder for markets to maintain stability. But what does that mean for investors? It means volatility. Investors are more likely to see their portfolios fluctuate, and it's harder to predict long-term trends. To navigate this, financial experts often recommend diversification, spreading investments across different sectors and asset classes to minimize risk. Let's say you have a portfolio of stocks, bonds, and real estate. In uncertain times, if one sector takes a hit, the others might balance it out, protecting your wealth. Another pressing issue is financial regulation. Financial institutions are under increasing pressure to comply with regulations aimed at ensuring stability and protecting consumers. The Dodd-Frank Act in the US and Basel III internationally have introduced stringent requirements on banks, such as holding more capital in reserve to cover potential losses. While these regulations are necessary to avoid another financial crisis like the one we saw in 2008, they also create challenges for institutions. For example, stricter capital requirements may limit banks' ability to lend, which can stifle economic growth, especially in small and medium-sized businesses. On top of that, the rise of digital currencies and Fintech is shaking things up. Cryptocurrencies like Bitcoin and Ethereum have created both opportunities and challenges for financial institutions. On one hand, they offer a more decentralized, accessible alternative to traditional banking, but they also come with risks like volatility and potential for fraud. Institutions are now scrambling to integrate digital currencies into their operations, but they must also be careful not to overexpose themselves to assets that can lose value rapidly. To put this into perspective, consider the rise of platforms like PayPal and Venmo. These platforms are now key players in the financial sector, but their ability to operate across borders raises significant regulatory concerns. It's a balancing act for governments, how to foster innovation while maintaining consumer protection and financial security. Lastly, climate change is increasingly being recognized as a major risk for financial markets. The World Economic Forum's Global Risks Report highlighted climate change as one of the most significant threats to global stability. From extreme weather events that disrupt businesses to shifting consumer behaviors demanding greener products, financial institutions are being forced to consider how these factors affect their investments. Companies that ignore environmental, social, and governance (ESG) risks could find themselves facing lawsuits, loss of investor confidence, or stranded assets. Now let's talk about some actionable strategies you can take to protect yourself in this environment. First, stay informed. Market conditions can change rapidly, and being educated about what's happening around the world will help you make better decisions. Use financial news platforms, subscribe to market updates, and most importantly, get professional advice before making major financial decisions. Second, consider long-term goals over short-term fluctuations. While it's tempting to react to market volatility, experts advise focusing on your long-term financial health. Whether you're saving for retirement or building an investment portfolio, staying the course while adjusting for market conditions can help you ride out the waves of uncertainty. And lastly, don't underestimate the power of financial planning. Having a clear plan in place, whether it's for managing debt, planning for retirement, or maximizing your tax benefits, is one of the best ways to navigate a turbulent financial landscape. Many experts recommend creating a diversified investment portfolio, balancing risk and reward to ensure you're prepared for whatever comes next. So with all these challenges in mind, how do you feel about the future of financial markets? Are you ready to make smarter decisions for your financial future? Drop a comment below and let us know your thoughts. Thanks for watching Factful Finance. If you enjoyed this video and found it helpful, don't forget to like, subscribe, and click the bell icon so you don't miss out on more insightful content like this. See you in the next video.